Trey Wasser, our gold expert, of course, he is the CEO and director of Dryden Gold Corp. Is on the air with us, and of course I don't know where he's joining us from. I know he's been traveling, so he may be in good old Snyder, Texas, right now, but I'm not sure. Where in the great white world are you these days, Trey?
I finally made it home, Sully. It was a grueling trip yesterday from Toronto with delays and cancellations and.
Well, it's great to have you.
But I'm back.
I want to talk about. Again, and we talked this about you about a month ago, about when you and I were on air on a regular basis before, about in 2021, gold was at $2,000 an ounce. And, gold is now, 4,000 plus, depending on what day you look at it. And
5,000 plus.
Oh, 5,000 plus now. See, there we go. There's the chart. And recently, silver has gone parabolic. So, bottom line is, give us an idea of why precious metal markets are doing this, because I know the hedge against inflation argument has been there on both sides. But is this really a hedge against inflation? Is this proof that that's actually what's happening here? Because this economy, as I talked about in COVID, went off like a light switch, on like a sunrise. And of course, they had to turn somewhere. And I think precious metals is probably the place. Is that accurate?
Well, it really, Sully, is a perfect storm now. So all those historic things like the weaker dollar and central bank buying and inflation hedge, those things are clearly in play. But on top of that, you have some factors that are affecting the gold and silver market. Silver's a little bit different story because it's the industrial uses are kind of overwhelming the physical supply there. But on the gold side, we really had a big transformation last year when gold was deemed by the Basel III, which makes the rules for the banks, as a liquid asset, a high quality liquid asset, meaning that it was comparable to treasury bills. So for your institutions, and that includes banks for their reserves at the Fed. It includes sovereign wealth funds and pension funds everywhere. Where gold used to be just kind of at the top of the pyramid for them as a speculative asset, it now can be down at the bottom of the pyramid as at the base for their high liquid high quality assets. And so, what we've seen is the banks, and of course, then as soon as that happened, the banks started raising their targets and recommending gold. And Morgan Stanley came out, very aggressive late last year and said everybody should change their traditional portfolio holdings from 60-40 stocks and bonds to 60-20-20 stocks, bonds, and gold. And wow, it's just been feeding ever since.
Trey Wasser is the CEO and director of Dryden Gold Corporation. DRYGF is their ticker symbol. Trey, with what's going on in the Middle East right now, will that have any impact on gold prices? Could there be panic buying or anything like that?
Well, we haven't seen it. In fact, just the opposite. Gold's dropped from about 5,500 to 5,000 this week. And that's really more because I think that the dollar has been very strong. So we've seen a flight to quality, if you will, in the dollar, although it hasn't gone in the traditional places of the bond market. The bond market yields have actually gone up a little bit. But I think other, more on the treasury bill side and even into stocks. So I think some of the support you're seeing in stocks is some foreign buying in here, but of course today the stock market's down quite a bit. So as I say that, but it really, the dollar has been exceptionally strong here since this war started.
Trey Wasser, CEO, Director, Dryden Gold Corp, ticker symbol DRYGF.
Hey, Trey, let's talk about gold exploration versus gold royalties, because I think gold royalties is a piece. I know we've got David Garofalo coming up on the air with us soon, and I want to talk about. You went from being the gold royalty guy to a new exploration company. There's a reason for that, because you're good at both. But I think both are so important for you to talk about as it relates to the whole economy.
Well, as you like to say, Sully, I moved from the top of the food chain, which is where the royalty companies are, to the bottom of the food chain, which is the junior exploration market.
Right.
I often compare for U.S. investors the gold or mining exploration market, which is mostly centered out of Canada, with biotech here in the United States. It's a model where you have no revenue, you have no income, and you're pretty much dependent on selling equity a couple times a year to keep doing your testing.
I think.
And
and
then of course with the royalties, now you're talking the very top of the food chain.
Sure.
A royalty off of a producing gold mine that has no costs associated with the production of the mine. They just strictly take a percentage off the gross,
Yeah.
and that's that truly is the top of the food chain.
Your Dryden property is in Northwest Ontario. You always talk about stable jurisdiction. What does that mean, and why is that so important?
Well, as I've said for years, when you really want to own gold, everybody else is going to want to own your gold too.
Yeah, that's a great
so point. When you're in bad jurisdictions, you're starting to see you see things like much higher taxes and royalties going up from the governments, and from that all the way to nationalization of the assets. Barrick Gold, one of the largest gold producers, had their largest mine in Africa, Mali, in the country of Mali, basically taken away from them last year. Now they've since gotten it back, but it cost them about $500 million.
Jeez.
So jurisdiction's very important. We operate in Ontario in Canada, which has just been deemed the second best gold jurisdiction in the world, behind Nevada. So it's very important, and the companies that are looking for exploration projects like ours, jurisdiction is very important to them.
Hey, can you talk a little bit about the press release that came out just 2 days ago in terms of Dryden intersecting 15 gold mineralized structures in a single place in Gold Rock? That's a pretty big press release.
Yeah, it really is. This is an area that it's about a 1 kilometer square area where there was a lot of historic mining in the early 1900s. There's a lot of very high grade gold there. In fact, when they first discovered gold there in the late 1890s, they called it the New Klondike.
Wow.
And this area,
no, not the bar, Mike.
That's what I was thinking.
Not the Klondike bar, Costa.
Yeah, not the Klondike bar, Mary.
Dang it.
Continue.
Yeah, if you look there, I think they're scrolling through, and I kind of missed the one I would have talked about here. But when we first got this in this 1 kilometer square area, we thought historically there were 3 known vein structures about 800 meters apart. And as we've been exploring this now, we've been hitting these other vein structures and sheared structures that are carrying high-grade gold that have no surface expression. So and this is down at our Gold Rock property. So what we did here is we decided, well, let's just set up on one side of one of those known structures and drill all the way through the third one on the other side. It was about an 860 meter hole, and we intercepted 15. 3 of them, of course, we knew were there, but and everybody's known those were there. But we hit 12 structures that weren't known to ever be there. No surface expression, but some of these structures that we're discovering here, again, have very high-grade gold in them, just like the known structures.
Well, this means big news.
Trey Wasser, CEO Director, Dryden Gold Corp, ticker symbol DRYGF. Thank you, Trey. All right, keep it here. Much more to come with the Big Biz Show.